Next up, Tesla had an incredible Q2 earnings report. Congratulations to the Tesla team. Over $1 billion in profit, which is up 10x year over year. From Inside Business, Tesla crushed its Q2 earnings, reported revenue of $12 billion, with automotive revenue of $10.2 billion, up 28% from last quarter. And that's not year over year, that's from last quarter. Tesla reported a net income of $1.1 billion, its highest so far. Tesla's Q2 2020 profit was $129 million on about $6 billion of revenue, so 1.7% margin. So as you can see over time, in Q2 of 2021, they made $1.1 billion on $12 billion, so 9.6% margin. You'll probably continue to see that happen over time, I would guess, as they get scale. Their operating margin more than 5x in 12 months. Pretty incredible. From the information, Tesla is becoming a cash machine, so much so that Musk is continuing to ramp up CapEx levels while the company is still producing free cash flow. Tesla shares were up 1.5% after hours following a 2% rally during the day. At this rate, Tesla shares still down nearly 7% so far this year, may soon make up the deficit for the year. So back in July, Tesla had reported they delivered 201,000 electric vehicles and produced 206,000 in Q2. It's just extraordinary. So analysts already had some indication what revenue would be using sort of back of the envelope math. Their current capacity is 1.05 million vehicles a year spread between California and Shanghai. They are growing quickly, obviously. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. In some years, we may grow faster, which we expect to be the case in 2021. To achieve that, Tesla is building factories in Texas and Berlin. Obviously, I think the Texas one is for the Cybertruck. The core automotive business still accounts for the bulk of Tesla's revenue, but the energy business is growing. From TechCrunch, Tesla on Monday reported $801 million in revenue from its energy generation and storage business, which includes three main products: solar, its Powerwall storage device in homes and businesses, and its utility storage unit, Megapack. I've been looking at this Megapack because I was thinking about getting one for the house. You could really they're big. They're like a bunch of Powerwalls in one giant pack. And you're seeing office parks and even little towns and cities put them in. Revenue from this division grew 62% from the previous quarter, more than 116% from the same quarter in 2020. They don't break up solar versus energy storage. It's all the same thing for them, which makes sense. Moreover, the cost of revenue for its solar and energy storage business was $781 million, meaning that for the first time, the total cost of producing and distributing these energy storage products was lower than the revenue generated. Congratulations on that as well. Tesla noted it owns about $1.3 billion in digital currency. That's interesting. They didn't say Bitcoin versus Ethereum. Maybe they own some Ethereum too. 3.5% of the company's automotive revenue, or $354 million, came from regulatory credits sold to more polluting automakers. That's lower than at any other time in the last 4 quarters. So incredible quarter. Congratulations to the Tesla team. They've worked really hard. And the proof is in the pudding. The product's incredible. And people who own Teslas, they tend to buy more Teslas over time, and the cars tend to last forever. And this doesn't even take into account, I think, the advances in self-driving they're making. From my understanding, the full self-driving stuff that I'm seeing on YouTube and people who are in the beta, I'm not in the beta, haven't asked to be in the beta, but people with the beta are really starting to complete, more and more complex drives without driver intervention. And it's growing really fast. So if you want to think about Tesla, it's really an energy company. The cars are about one piece of that stack. Your home, having solar and having a power pack, mean that your house is the new electrical part of the electrical grid, and it's the most important part. It's like having a well at your land where you could pump up your own well water and be independent of the grid. Think how differently the world will look during global warming if we accomplish 2 tasks. One, we don't have these centralized power lines everywhere that can get blown over and cause fires. That's why when we have wind in California, Northern California specifically, they shut down the power grid preemptively because they know that sometimes a line will break because a tree will fall on it or it'll just fly off, and that starts the fire, and then you have a wildfire. So in an abundance of caution, they turn off the power grid sometimes during high wind here. And so if each home has its own energy supply and is energy independent, that takes more and more load off of the overall grid, which means the grid is not going to be under duress, and you might be able to sell your energy to your neighbors. And if things go offline and global warming, et cetera, we will have less peak demand because your batteries will kick in during the peak. Let's say a really hot summer afternoon. if it's a hot summer afternoon and you have your own battery pack, then you are not straining the grid. When the grid gets strained, then it has to do more fossil fuels. So most of the grids are set up to, if you hit peak load, it starts burning the coal. So it does all clean energy and renewables until such time it needs to hit the dirty, fossil fuels, is my understanding. And so that obviously puts CO2 into the environment. So we can nip this in the bud just by getting rid of the peak and smoothing it over. We should at some point just absolutely take an infrastructure bill like this, like the next time we do infrastructure, or we have a surplus in a place like California, we should just subsidize the heck out of solar to a ridiculous degree. We should mandate solar on every roof. We should mandate power walls or their equivalent. It doesn't have to come from Tesla, it can come from anywhere. But we should get more serious about it. It's just a clear win. And obviously all cars should be EVs, by 2030 or 2040. And we should start retiring cars and taxing cars to get them off the road and stop making them, right? And this is where that tax credits, I know people, it's a trigger issue for some people, or a triggering issue. Why should a big company that's doing so well get those credits? Well, they're getting those credits because other companies refuse to make EVs. You need to have a carrot and a stick. The carrot is Tesla getting rewarded for making these incredible cars and stopping the pollution of the environment. The stick is Volkswagen having this stick over their head that they have to improve their mileage and their, what's coming out of the back of those tailpipes emissions. And they actually lied about it. And the stick is what's pushed even Volkswagen into EVs. So carrots and sticks, they kind of work. And taxation is one of those things. And the transference of capital from people who are burning fossil fuels to the people who are buying EVs. I think entry-level EVs, we should make super cheap. Give like a $10,000 tax credit on, $50,000 and under cars. Just get them on the road. And all, city vehicles, et cetera, we should just get off the ICE engine. I mean, it's time, people. It doesn't take a genius to figure out that cities are better to live in when there's less pollution. We saw it during the pandemic when everybody was locked down. You could see the stars again. That's the future we all want, right? I mean, we have that future. It's right there. We could just take it. And we could take it and create incentives to move people there quicker. Okay. And I'm going to get a Cybertruck for sure. But I may get a Land Rover Defender in between. Like I'm going to maybe lease one for 2 or 3 years because I need a car to go in the snow, like full wheel on the. I want to drive on beaches. I don't know why. I feel like going for a drive on the beaches or in the snow. So tell me which 4x4 to get if you have any ideas. How much time and money do you spend integrating a bunch of different software products together at your company? Let me guess, way too much time. Well, Odoo is here to help. Odoo is a suite of business apps that runs your entire company on one platform. They'll streamline your workflow by bringing all of that information together. Plus, Odoo's integrations eliminate repetitive tasks and data entry. If you only need 2 or 3 apps to optimize your workflow, that's all you pay for. Odoo won't stick you with the bill for apps you don't use. Odoo has an app for every business need. They offer 30 main apps that are updated regularly and over 16,000 apps from their active open source community. You can keep your books tight with their financial software, and their sales and CRM apps will help provide a clear and organized view of your business. So here is your call to action. Your first app is free forever. And right now, Odoo is offering a $1,000 credit on your first implementation pack. That's not a joke. That's $1,000. Just go to odoo.com/twist to check it out. That's odoo.com/twist.